Good afternoon and welcome to the inaugural Pengana Alpha Israel Fund webinar. I am Russell Pillemer, CEO of Pengana Capital Group Limited. With me today are Sagi Ben Yosef and Gabi Dishi from our Israeli joint venture partners, Alpha LTI. The formal part of today's presentation will take about 40 minutes, after which we will answer questions. Please submit any questions that you have via the box on your screen. Investing in selected technology companies has created huge wealth for investors over the last 20+ years, and this experience is likely to be repeated over the coming decades. No country in the world is more attuned to this opportunity than Israel, which on a per capita basis is unrivaled in the world of technological innovation and entrepreneurship. Israel has the highest percentage of R&D to GDP spend in the world. It hosts R&D centers for in excess of 300 global firms, the largest number of any country. And it has the greatest number of startups per capita globally. In addition, Israel has a strong and resilient economy that is well regulated, whilst at the same time being very business friendly. Israel is still a young country, and although it has come a long way over the last 7 decades, it still faces significant challenges, including being a small country with a small population and very little natural resources. Luckily, none of these factors are significant impediments to succeeding in the world of technology, where to be successful, only one key ingredient is required, and that is human capital. A population with a great education, high intellect, and unbending will to succeed without the fear of failure. In Israel, they have an abundance of this resource. Over the last few decades, Israel has had some incredible success stories in high-tech and low-tech industries, with many of these revolutionizing the world and generating huge returns for investors. So successful has this been that today, Israel, a country with only 9 million people, has the 3rd largest number of companies listed on the Nasdaq, after the US and China. But this is just the start. And in our view, over the next few decades, the opportunity from investing in Israeli companies will dwarf that of the last 2 decades. This includes companies in high-tech and specialized sectors, such as semiconductors, cybersecurity, clean tech, aerospace, automotive, fintech, and many others. Whilst investing in technology has historically been an excellent choice for investors, the experience of investors is not uniform, with returns from the top quartile of investments dwarfing the rest of the market, and unfortunately for some investors, getting burnt along the way. The lesson is this, and that is, in order to make excellent returns whilst at the same time managing risk, investors need to entrust their capital to a fund manager who firstly has an exceptional understanding of technology businesses, secondly has access to management and deal flow, and thirdly, and very importantly, a manager who understands how to manage risk. Recognizing the importance of these 3 factors, Pengana has chosen Alpha LTI as our partner to bring the Israeli investment opportunity to our Australian investors. Fortunately for us, Alpha has been managing an Australian unit trust since January 2018. So rather than having to launch a new fund, we were able to take over and rebrand the existing fund, which now has close to a 3-year track record. Established in 2005, Alpha manages circa 500 million with a highly experienced and successful team, specializing in listed and pre-IPO investing. In our view, Alpha is the preeminent boutique Israeli fund manager. This is shown by the exceptional long-term track record of delivering risk-adjusted returns. Alpha's skill is clearly evident when looking at the returns generated since the inception of the Australian unit trust vehicle, now called the Pengana Israel Alpha Fund. During this period, the fund generated compounded returns in excess of 9%, that's 9% per annum, whilst the Tel Aviv Stock Exchange was flat and the Tel Aviv Small and Mid Cap Index was down approximately 6.5%. And that's a compounded number as well. Before I hand over to my colleagues, a few words just to refresh your knowledge on Pengana Capital Group Limited. PCG is a publicly listed Australian funds management company with in excess of 3.3 billion under management. We run 13 unique investment funds that are actively managed by distinct investment specialist teams. Our funds are highly differentiated, but each targets strong long-term investment returns combined with an underlying focus on capital preservation. I encourage you to take a look at the full range of our funds, which can be found at our website, pengana.com. Thank you for taking the time to listen to me. I look forward to answering your questions at the end of the session. I will now hand over to my colleague, Sagi Ben Yosef, Managing Partner of Alpha LTI. Sagi, over to you.
Thank you, Russell, and shalom, and thank you everyone for joining us today. During my part of the presentation, I will try to describe who we are, our expertise, the fund structure, and our unique offering to you as an Australian investor. Alpha was founded in 2005, and today we're one of the leading equity fund managers in Israel. Our team is made up of founders and partners with extensive expertise, specializing and focused on the Israeli capital markets. Alpha is considered as one of the go-to guys in the Israeli market. We manage around 500 million Australian dollars. Our modest size allows us to participate in smaller off-market transactions on our own, as well as to co-invest in larger off-market transactions. Our first fund, as mentioned, Alpha Value, is one of the best performing equity funds in Israel since its inception. So besides the good looks of the team that you can see, you can actually see our vast individual and collective experience. We have worked together for a long time and formed a strong DNA. 3 of us have worked together for over 20 years. Myself, prior to joining Alpha, I was a founder and partner of a family office business that had a joint venture with Alpha since its inception. As mentioned before, in early 2018, we initiated a joint venture in Australia to form the only vehicle of its kind, an Australian unit trust that offers Australian investors access to an on-ground fund manager with expertise in investing in Israeli companies. We believe that this unique vehicle is a great opportunity for Australian investors to benefit from its thriving Israeli economy and its global leadership in technology. Our universe of investments include Israeli companies traded on the Israeli Stock Exchange, as well as other global exchanges, mainly on the Nasdaq. An interesting fact is that after China, there are more Israeli companies listed on the Nasdaq than any other foreign country. A major benefit, as we see it, for Australian investors is the ability to diversify their global equity exposure by including Israel as part of their global asset allocation. This means investment in sectors and companies which are either hard to find or do not exist on the Australian Stock Exchange. In particular, high-tech companies and specialized sectors such as semiconductors, cybersecurity, clean tech, aerospace, automotive, and others. We will elaborate on 2 of these sectors later in the presentation. Our 16-year track record supports our belief that active management has a fundamental advantage when using an active fund manager investing in a market like Israel, which is typically very difficult for outsiders to access. So what do we focus on and how do we do it? We look to find Israeli companies with competitive technological advantages. These could be either high-tech companies or what we refer to as low-tech companies with a cutting-edge technology. A great example of a low-tech company with a cutting-edge technology is Iscar. It's a metal cutting tools business that was acquired by Warren Buffett in 2010 for $6 billion. Notably, this was Berkshire Hathaway's first investment outside of the US, while you can say the first company that Warren Buffett bought outside of the US was in our small country, Israel. We typically invest in mature companies that have a product and a global market advantage due to the cutting-edge technology and intellectual property that they possess. We will show a few examples of such investments in the following slides. Our sweet spot, as we see it, are companies that fly under the radar with low analyst coverage that trade at significant discounts to their true value and therefore have the prospect of earning outsized returns for our investors. An important fact is that about 2 years ago, the Tel Aviv Stock Exchange was listed and began to pursue a growth agenda. This is a very positive fact for us because it has resulted in a surge of IPOs and increased interest in pre-IPO capital raisings. We're very well placed to participate in these due to our strong relationships across the domestic market. Lastly, I would like to mention that Israel is ranked first in the world for both innovative capacity and entrepreneurship, and based upon these foundations, we're confident that the IPO market will continue to flourish for many years to come. We believe that an important advantage that our fund has is its unique portfolio construction that incorporates 3 different strategies into one single fund. These are value, growth, and special situations. It is important to emphasize that these strategies are not implemented in equal weights and are determined based on the opportunities in the market at any point in time. Firstly, value. Valuations are paramount in these strategies, and investments will generally be into industrial companies with a distinct technological advantage. Investments will be made with a strong margin of safety when comparing price to valuation. The second strategy, growth, provides access to Israeli innovative edge, focusing on companies with significant and exponential growth potential. Many of these are high-tech companies listed on the Nasdaq. Thirdly, the special situation strategy, although it's the smallest allocation of our portfolio, is made to special situation that investments provide for potential highest returns, often through investments in corporate actions that can have significant upside. This is actually the only strategy in the fund that we invest with a short-term outlook of up to 12 months. We also have a policy of hedging our equity exposure, which sometimes we refer to as our fourth strategy. This strategy does not only protect the value of the portfolio, but it also allows us to make investments when equities are severely oversold and cheap. We implement these hedges by buying long-dated, out-of-the-money put options on the index. We bring together all of our vast knowledge and expertise in each strategy and implement it into a single fund. Notably, this is different to what we do in our other funds in Israel, which are single strategy funds, one dedicated to growth and the other to value. We believe that in today's constantly changing environment, implementing these different strategies in one fund allows our product to really deliver our best ideas and the best of what the Alpha platform has to offer. We are unconstrained, we can be flexible and react quickly, and obviously we benefit from the dedicated fundamental research we do across the business in existing and new companies for the fund. And as indicated before, most importantly, we're here on the ground in Israel, right in the middle of the action. I now will hand over to my partner, Gabi, who will take you through the actual investments and themes of the fund.
Thank you, Segi. So now I will take you through a few case studies, and I will start with one company that I think really reflects the way Israelis approach businesses. Israeli thinks global. In fact, in a typical Israeli startup, a global marketing manager is often the first employee. Medtronics is a very interesting example because when we initially bought it, it was a value investment, but the investment thesis has played out so well that we now hold it in our growth strategy. Medtronics is a world leader in robotic pool cleaners with over 45% market share in the US, France, and elsewhere. In Australia, you might know them under the Dolphin brand. They are also a great example of global thinking, a company that makes robotic swimming pool technology that comes from a country where you can barely find any private pools. We first visited Medtronics in 2007 and found an excellent management team, great product, and a global footprint. But things went off track in around 2009 after they acquired a French producer of pool accessories. They couldn't make the acquisition work. It was a huge destruction and a drain of company resources. Profits plummeted and the share price followed. But because we knew the business, we understood that closing the loss-making division would return the company to its previously strong profitability. And even more important for us, because we knew the management team, we knew that they understood exactly what to do and that they were committed to take actions. It was at this point that we acquired our equity. And by 2013, the business was back on track. Over the last few years, Medtronics has evolved into a growth opportunity as it has continued to expand its global presence while remaining at the forefront of innovation and product development. In our estimation, Medtronics still has a huge growth potential. There are about 24 million private pools globally that do not have any robotic pool cleaners. I think that's even more important. Medtronics are leaders in innovation in their space. They are in the late stage of development of a voluntary water treatment technology with the aim to change the industry and the way pools are kept continuously healthy and clean. The market cap of Medtronics today is about $1.5 billion US. SolarEdge technology is a good example of growth company. Its addressable market is growing in double digit, and as the company expands its product range, the addressable market increases further. This company is a provider of power optimizer, solar inverter, and monitoring solutions for photovoltaic arrays. And in 2019, they expanded into batteries as well, and now offer a comprehensive solar solution. Interestingly, the company, which is listed on the Nasdaq, and the headquarters are actually here in Herzliya, only 500 meters from our office, they does not regard themselves as a solar company. They think of themselves as a pure technology company that currently focused on solar solutions. We love the company. It has a pure and proven technology edge that will maintain the growth potential of the company for the next few years, and it can rely on its existing strong client base to introduce new products. SolarEdge is one of our major success stories. When we launched the Australian fund in January 18, we acquired this stock at a price of $35 per share. We recently partly exit our position, and the share price today is around $260 per share. Mellanox is a different kind of investment. The investment in Mellanox forms a part of our special situations bucket, which is the most complex segment of the portfolio. As mentioned previously, it is the only part in our fund where we may invest for the short term, and special situations aren't that common, so we usually only identify 2 or maybe 3 opportunities in a specific year. We followed this company for many years, actually long before it even went public, and in 2018, a special situation emerged as the company was targeted by an activist private equity investor at the same time as rumors were circulating around about multiple takeover bids. We bought our share in the company in January 19 after the correction in the markets of December 18, and ultimately NVIDIA bought Mellanox for $6.9 billion US, which was one of the biggest high-tech deals ever in the Israeli market. Whilst we have a high degree of confidence in our long-term valuations of the portfolio companies, we recognize that in times of severe market dislocations, market valuations are likely to be negatively impacted. Our approach is to protect the portfolio against fall over than 15% in a specific year. In order to achieve this, we deploy an active hedging strategy and roll approximately 25% of our hedge every quarter. A key benefit of having this downside protection is that it provides us with a liquidity in the event of market crash and enable us to confidently take advantage of the great opportunities that present themselves in times of crisis. We do it by both specific stock selection as well as increasing our weight in the growth section of the portfolio. As you can see in the slide, in the last almost 3 years already that the Australian fund has been operating, there has been 2 large market drawdowns. And in both instances, we have performed strongly on a relatively basis. We were able to take advantage of the downside protection strategy using the money from the put options to buy equity and adjust our option strategies, and both works very well for us. As mentioned before, last year, the Tel Aviv Stock Exchange became a listed entity in its own right, and in turn, has become a more commercial platform. There is an ongoing program to get more companies to list in Israel, rather than raising capital privately or listing on the Nasdaq or other listed markets. We think there will be great opportunities in the smaller companies with market cap of between 150 to 400 million US dollars, mainly since that they are too small for IPO in the Nasdaq. These often have better growth engines than their larger counterparts. Due to our market share in the largest Israeli underwritings of about almost 10%, we have a great access to significant deal flows for pre-IPO's equity raising. Furthermore, this deal flow is increasing as well as a result of the new focus on getting companies to list on the Tel Aviv Stock Exchange. We are currently in negotiating with 2 very exciting opportunities, and we think that at least one of them will go public this year, with the other likely to go public maybe in the first quarter of 2021. The objectives of our portfolio construction are diversification and risk mitigation while targeting a 15% per annum. We are long only, but obviously mitigate better risk with downside protection. We typically invest in about 25 to 30 companies with an average market cap of about 400 million US dollars. However, because we are unconstrained, we sometimes invest in companies with much larger and smaller market cap. Typically, in each of our investments, we aim to achieve a return of at least 50% over a period of 3 years, resulting in a target return of the fund of 15% per annum. Our focus is strictly on Israeli companies listed either in Israel or in a different exchange around the world, but of course, mainly in the US. In this slide, you can see that we currently hold about 32 positions. About 60% of the fund invest in companies that are listed in the Tel Aviv Stock Exchange, and about 27 in Israeli companies, 27% of course in Israeli companies that listed in other exchanges or duly listed. You can also see that our biggest part invested in technology companies, but technology is a very wide word, and you can find technology also in some of our finance and healthcare sectors. You can also see here that our sweet spot are companies in a market cap of between 100 million US dollars to about 1 billion US dollar. Earlier in the presentation, I provide you with one example of each of our three strategies. There are so many other great examples, and from my point of view, some of them are even more interesting. But the problem is actually that I can go on and on for hours. Let's go over a few themes and positioning in the fund quickly. A big part of our fund and its performance derives from investing in semiconductor sector. Israel is well known for its strength in the semiconductor sector, and you can find many Israeli semiconductor companies on the Nasdaq and in the Israeli Stock Exchange. There is no doubt that the importance and dependence of the control process equipment is significantly increasing as technology advances, and that is mainly due to the growing number of transistors placed on each silicon wafer, which make the control process more and more important. Our strong long-term view is that this industry will continue to grow, largely due to demand from the automotive industry, which is probably the biggest consumer of more advanced chips, but as well from broader applications of semiconductor chips such as cloud, mobile, IoT, crypto, and many more. On this slide, we show a few examples of some of our investments. Over the last 3 years, we have already exited some of the great investments in the semiconductor sectors, such as Biotech, that was bought by KLA, one of the biggest semiconductor companies in the US. Mellanox, which I just described as well, Hamlet, and many more. Renewable energy, or clean tech, also plays another big role in the fund. We've built a relatively sizable positions in a few companies that specialize in initiation, development, and operation. I've already mentioned SolarEdge, but we also hold Gensel and Doral, which are very different examples, one from each other. Doral is a development and operating company that has a unique advantage since they have a land from the Israeli kibbutzim and authorities, which gives them a huge advantage in the tenders because their competitors should bid the land just after they win the tender, which makes it less profitable and with much more uncertainty. Gensel's technology aims to replace the diesel generators with hydrogen. Approximately about 10% of the fund is currently exposed to renewable energy, and we believe that this sector is set for strong growth in the coming years. Over the last 3 years, we have already exited 2 fantastic companies with a great return, Enlight and Energy. In this slide, across our universe, which includes the listed and the pre-IPO companies, we found great opportunities. Companies that can change the world with disruptive technology or process, or a completely new approach for an existing business model. Fiverr and Electron are 2 very different examples of amazing companies that have generated great returns for our fund. Fiverr, which is a Nasdaq listed, is the world's largest freelance service marketplace and has completely disrupted the sector. Electron is a locally listed in Tel Aviv and less established, but their solution has a potential to advance the electric vehicle revolution, and in doing so, the reshape the entire transportation industry. We also classify Electron as a special situation, having got our shares in a private placement. Thank you.
Thanks, Gabi, and thank you, Sagi. I'll just quickly go over some of the key facts about the fund. Firstly, it is a wholesale fund, which means you need to be classified as a wholesale investor in order to invest. And the minimum investment amount is $250,000 with an additional minimum investment amount of $50,000. The buy-sell spread is 25 basis points on either side. The buy-sell spread is an amount that's charged investors coming in and out of the fund. This money does not go to the fund manager, it goes into the fund, so the fund benefits from the buy-sell spread, and it's there in order to compensate the fund for actually having to invest the new money that comes in the door, or alternatively sell stocks when money goes out the door. And that's a common practice I think most investors would know in the funds management industry. The management fee is 1.5%. There is also a performance fee of 20% of the profits above a 4% hurdle. And that 4% hurdle has what we call a high watermark, which means that if the performance drops below 4%, it has to get up to 4% in a future period in order for the fund manager to be eligible to earn a performance fee. So you can't benefit from the fund value going down and then generating additional return. So it's got to get back up to that high water mark. The unit pricing is monthly, and for investors looking to get into the fund, you can do that on a monthly basis, or alternatively exiting the fund, you can do that on a monthly basis as well. Distributions are annually, and applications and redemptions are monthly with 30 days notice. So in summary, we think that investing in Israeli technology companies is an exceptional opportunity and provides an excellent path to investing in the future of global technology. In addition, we think that Alpha LTI is the best placed fund manager to run such a strategy, delivering strong returns whilst providing a focus on downside protection. Finally, we are very happy to bring the Pengana Alpha Israel Fund to Australian investors, and think that it has the possibility of providing substantial benefits to your investment portfolio. Thank you very much. That concludes the formal part of the presentation, and we will now move to answer some questions. Please input your questions into the Q&A box on the screen. I'll kick off with the first question. I think probably, Sagi, this one is for you. Recent peace treaties have been announced between Israel and some of its neighbors, being the UAE and Bahrain. What does this mean for investing in Israel and for the fund specifically?
So and this is a great question, actually, Russell, because it is a big milestone for Israel from a geopolitical point of view. Obviously, having a lot of the Arab Sunni countries form this relationships with Israel, but from our point of view as investment managers, it even has a bigger potential, because these are markets that we've never had any official penetration to. These are countries that need Israeli technology. They have said that in every instance that they talked about it, especially in the food tech, in the agri-tech, clean tech, and it has a big potential for Israel. And even recently, when the S&P just reinstated their high rating of Israel's credit rating, they mentioned the fact that this is one of the most positive things that happened to the Israeli economy recently.
That's great. Thank you, Sagi. Next question, I think this is for you, Gabi. What are your 3 best picks in the portfolio in terms of small companies that have the potential to become mega companies? Maybe just elaborate on that.
It's, I must admit, it's a very difficult question, the treaties, because it changed based on the sectors, specific sectors that you invest. But I think that the first thing is the ability and the experience of the management. Second is, as I mentioned, Israeli thinks global. You need to understand that the company understands the global potential and the marketing, and of course to be innovation, to have an innovation ability, because I think every company that we invested in changed their business model and their products over the years, and you need to have the ability to be innovative enough.
So Gabi, come on, we need an answer. We can't. So give us just one then. Give us one that is a pick that you think can become a mega company.
So if you ask for a name, so we have I just mentioned about 2 pre-IPOs that we are in negotiation, but I believe that one of them going to be public in the next few weeks. The name is Human Extension, the company that make robotic laparoscope that can actually change the way that surgicals make surgeries in the next future, and actually can be a world leader in this segment. They're changing the whole industry from our point of view. Instead of using either the big Da Vinci robots in the hospitals or the old laparoscope, they invented a new one that can change their industry.
Okay, fantastic. Like that sounds good. Israel has had a tough time recently with COVID. It's been a pretty devastating outcome for a while now. How has the actual local situation impacted the fund? I'm going to say to you, Gabi, or maybe Gabi take that one.
So actually it helps us a bit in the fund because our downside protection. Because you're right, Israel, I think like many other countries in the world, had some problems due to the COVID-19. But as you can see in about the share prices, so in March 2020, they just dropped significantly. We, due to our downside protection, we had enough liquidity and the ability to take the great opportunities that we found in the market. That's the first thing. Second, if you had the ability to understand that it's gonna change the world. It's not just there are things that usually takes 5 or 10 years until they happen. But now in a specific year, you can see companies that have a great technology can change your the ability from doing things from home, not only in cyber security, also when you talk about other things like digital and companies like Wix or Fiverr that can give you the ability to work from home. We believe that actually to a country like Israel, in the long term, it's going to help.
Thanks, Gabi. Next question, also on the theme of COVID. Have you got any exposures in the portfolio that are involved in the treatment of COVID, whether it's vaccines or medications or technologies, etc.?
Yes, actually, we benefited from 2 of our portfolio companies, very different ones. I think one of our biggest position in the fund is a company by the name of Ilex Medical. They are the one that make the test for COVID-19 in Israel, actually in South Africa, and parts in South Africa as well. That's the first one. The second is the company that we sold actually 2 months ago by the name of Kamada, that are doing treatments for people who already have COVID, and they can help with their treatment with plasma. They can help to feel healthy again.
Great, thank you. Another question, and this is that you seem to be changing from being a fund manager who invested strictly in listed equities to a fund manager who invests in pre-IPO or private equity. Surely this is a different skill set, and what makes you think that you can be successful in doing this?
There is a big difference from our point of view between private equity and pre-IPO. We believe that the pre-IPO is like a more combination of private equity and listed companies, but even more close to listed companies. So despite the fact that we invest in listed companies, Alpha, since inception, holds a big stakes in its portfolio companies, mainly in many companies over more than 5% in each one of them. We also are the main shareholder in one of our portfolio companies, and we hold, as I mentioned, 10% of the largest Israeli underwriters. So we believe that the skills and that we have can take a company. Just maybe it's important to understand what is pre-IPO first. From our point of view, pre-IPO usually are companies that we understand and believe that we can take them to IPO in the next 6 to 12 months. So it's very close. So usually we have the book, the book before. We know which of which institutions are going to join the IPO. We understand that the company wants to go to the IPO with a very strong partner, and by going to the IPO with Alpha, it's going to help the company to have a higher market cap when they are doing their IPO. We are not managing those companies. It's important to understand. We just give them like a bridge to the IPO.
Okay, great. Thank you. Thank you. That makes sense. Moving on, there's a question about agriculture. Do you have any exposures to agriculture or agricultural technology in the fund?
So for the specific moment, we don't have any exposure to agriculture. Again, it changed over times. For now, we are a micro investments, not a macro. So we like the agriculture environment in Israel, but still we need to find the right company and the right valuations to get in. For now, we have another great opportunities. So no, answer is
okay.
No.
Okay. And what about biotech? Anything exciting there?
So we are not a big fan of biotech. Okay, I mentioned Canada and Ilex Medical before. They are not biotech companies. So the problem with biotech is you need to have 10. You need to wait about 10 years before you know the results of the company. Usually, you need to understand that those companies gonna need another capital raising, and that's the thing. That's the huge problem of this segment. I don't say that it's not a good sector to be in, but we are not. That's not the space that we are specialized in. We are invest only in places that we understand, and we have advantage on the others investors.
Right. Well, following on from that topic, Gabi, do you only invest in companies which generate positive cash flows, or will you invest in companies that are negative on cash flow?
So most of our fund, I think about 90%, are invested in companies that have a positive cash flow. We like it, but we try to limit the exposure for companies with a negative cash flow for about 10% from the fund. I just mentioned Electron as one of the examples, company that can change the world in their segment. But of course, they are too premature to have a positive cash flow. So we limit the size of the whole part to 10%.
Right. Now, Gabi, you also include big listed companies on the Nasdaq in the portfolio, as well as small Israeli companies. How different is it between investing in these types of companies, and do you have the skill set for both?
So again, the companies that you said that are big companies in the Nasdaq, they are small cap companies in the Nasdaq. They are big compared to the Israeli market. The valuation of about $4 billion, which is very big for us, is still like a small to mid cap in the US. Again, we prefer to be in the small to mid cap area because we can have advantage by understanding the DNA of the company. Usually we know the company before it was too complicated to understand. Let's take SolarEdge that I just mentioned as an example. We started investing in the company where the market cap was about 500 million US. Now they are way more. So I don't think that it's different skills, especially, and I think that's the main question, if the management team and the headquarters are in Israel. That's the most important thing for us.
So Gabi, are you limited to investing in Israeli companies which are headquartered in Israel?
We are limited. Again, it's a legal question, but we are limited only to invest in Israeli companies. And I think until now, each of the companies that we invested, their headquarters was in Israel.
Great. Moving on, and maybe Sagi, this one is for you. We'll give Gabi a rest.
Right.
Yeah, Israel is often on a war footing. What are the implications for the investment portfolio if there was to be another outbreak in a conflict in whatever form?
So if you look at the Israeli history for the past 70 years, we've had quite a lot of wars and events that have happened in this region. I think that in the last 30 years, you can see that there's a big disconnection between the way that foreign investors look at Israel. For example, if you look at the example that I gave before about Iskar, which is the Israeli company that Warren Buffett bought, he actually bought it, the first part of it was bought in 2006, which was the Second Lebanon War. And, a lot of reporters were asking him, Warren, aren't you worried about the fact that you're here in Israel when there's a war and you're making this acquisition? And he said, I'm looking at Israel from an investment point of view. Obviously, the risk is there. But I think that if you really look at the graph and you look at the last 20, 30 years, you will see that it has a very limited short-term impact, but on the long term, there's no really impact to that.
Fantastic. Okay, great. Next question, Sagi or Gabi, either one of you pick this up. How do you value pre-IPO companies in the portfolio? Because obviously they're not being valued, by the marketplace on a daily basis.
So as I mentioned, in the Pengana Alpha Israel Fund, we limit for 5% from the fund in pre-IPOs, and all those IPOs should go public in a maximum time of 6 months. So until now, each of our pre-IPO just was evaluated in the same valuation that we invested, because they went public 2 months after. So it was too close in their time period. Because it's a short-term investment, the valuations between the pre-IPO and the IPO is very close. So until the IPO, we hold it in, we leave it in the same same market cap that we invested.
Yeah. So you hold it at cost until the actual IPO.
Exactly.
Which is consistent with how we would handle such investments across the Pengana funds. Next question is probably one for you, Gabi. There indeed is a lot of interest in investing in Israeli companies. We've seen it, just on the call today, the amount of people who are on our call today, plus we see it globally, plus no doubt there'll be a lot of money flowing in from the Arab states after the peace treaty, etc. We see money coming in from China, from the US, etc. Everybody wants a piece of investing in Israel. Surely that supply of capital is going to drive up the prices of investing in Israel. And how will you, as a fund manager, be able to still pick good value companies? Will you still be able to find good opportunities with this weight of capital coming in?
So I think that's the question that we ask ourselves every day, because in the last 15 years we had so many times that we felt the same, but we still find an opportunities. We are, as I said before, we are micro investors, not a macro. We look on a specific company, and when you look on a specific company, you can every time find things that no one can understand and see. I think the first advantage of Alpha is when you look on the pre-IPO or small to mid-cap companies. Those are companies that usually takes time for foreign investors or to big institutional to find those companies. We have a better relationships with the management teams. I think that's one of our biggest advantage. And at the end, there is a big question today, whether we are in evaluations of the end of 2007 or the evaluations of 2008, because we see a differentiation in the market between so many companies. Some of them are in a very high valuations, and some of them having, we find them as a very attractive one. Like I mentioned, human extension before, the one that makes laparoscope. We believe that it's a very low valuation. It's all a question of deal flow, the right deal flow, the ability to do it, to take the call very quick, and to be the first one who actually get the opportunity. We are on the ground. That's, I think, one of our biggest advantage here.
Great. Moving on to the portfolio construction, you mentioned that there's a sleeve for special situations. Can you tell us what percentage, do you have a percentage limit in the special situations bucket? Secondly, what types of returns would you be targeting in special situations? You said 15% for the portfolio as a whole, but are special situations more? Can you tell us how many special situations do you have in the portfolio at the moment, and maybe if you want to mention one or two of them. So starting again, I know I mentioned a lot of questions there.
Hopefully I'll be able to remember everything, but I'll start with the first question of limits, the special situation bucket in the fund. So we don't have a legal limitation, but usually, as I said, we have about between 1 or maybe maximum 3 special situations in a specific year. So usually in each one of them, we won't hold more than 5%, and altogether it won't be more than 10% in the fund. Again, it's an internal decision. It's not legal decision. About the returns. So in each special situations, you look for a higher returns than usual. Okay, I think mainly because of the reason that it's for shorter term than all the other investments. So usually it's a specific situation. It's more like an event-driven company that you already know, understand, and you know that the opportunity is usually up to 12 months. So I think we won't get into a special situation that we won't see at least 35 to 50% in the specific investment. And since it's up to 12 months, it's a significant opportunity. About a specific investment, I just mentioned the Electron that we hold in the fund. And the reason that we called it, we put it as part of our special situation, and actually we more than doubled the return. We have more than 100% in the last 6 months, this specific investment. Mainly it's special situation because it was a private placement for us. The company just won a big contract in Italy and in Sweden. They needed money quickly for those contracts. We gave them. We took few big institutionals, Israeli institutional with us, and that's why we called it special situation.
That's
Each
right.
private placement for us is a special situation.
Gabi, in terms of a question on the returns over the last few months, the Nasdaq has had some stellar returns over the last few months. We haven't quite matched what the Nasdaq has done. Can you comment on that and sort of how you see that playing out, over the longer term? Recognizing these are short-term movements.
So actually, you gave the answer by yourself, but again, we all know that every investor in the world can feel a bit having some problem comparing to the Nasdaq in the last few months, mainly because the Nasdaq is not really an index. It's 5 big companies that influence on the return. So I say you straightly, I don't like the situations to not beating another index or something. We always want to be the first one. But as you said at the end of your question, we are long-term investors. We believe that the fact that we do not beat the Nasdaq until now in the last few months, it just, for us, it just give us a better understanding that our portfolio holdings have a better potential in the next few months, because each one of them reached the milestones that they gave us at the beginning, and that's how we check ourselves.
Fantastic. James, I think Gabi and Sagi we'll need to stop it there. We're closing in on the hour time limit. Thank you, both of you. That was fantastic. Always love listening to the story and the detailed knowledge that you have of the Israeli market, and gives me personally a lot of insight and excitement about the fund. If we haven't answered the questions, my apologies. We haven't been able to get around to all the questions, but we will be back to you with specific answers to your questions for those of you who didn't manage to get them on the call. Please contact us if you want to discuss the fund or any aspects of it. Our client service people are very happy to speak to you at any time of day or night.